What if I told you a roughly $200 million microcap just demonstrated technology that can compete with data center class GPUs on specific workloads, while using a fraction of the power? Most people still think GSI is just a boring SRAM vendor from another era. But over the last year, that perception has quietly broken down. And the reason isn't hype, it's execution. For a long time, GSI lived in a box, the market built for it. Specialty memory, niche customers, steady but forgettable. Then something shifted. Instead of selling components, the company started shipping systems. Instead of talking about memory density, management began talking about associative processing power, efficiency, and real-world AI inference workloads. That shift matters because markets don't reprice stories, they reprice business models. The core of this transformation is the Gemini platform. Gemini isn't trying to beat massive GPUs at brute force training. It's designed for search-heavy pattern matching and signal processing tasks where power, efficiency, and parallelism matter more than raw flops. In controlled benchmarks and customer testing environments, Gemini has shown that it can deliver comparable results to high-end GPUs on certain workloads while consuming dramatically less energy. That one fact alone reframes the company's relevance in an era where power and thermal constraints are becoming as important as compute. This is why the customer mix matters more than top-line revenue at this stage. Over recent quarters, GSI has been very clear that it's prioritizing higher-margin system-level products over commodity memory sales. Server boards, accelerator cards, and tightly integrated solutions now sit at the center of the strategy. The revenue numbers are still small, but the direction is not. For a company of this size, even modest adoption by a handful of serious customers can materially change the financial profile. One of the strongest credibility signals came from government and defense work. GSI secured a strategic Air Force-related AI chip development contract, small in dollar terms but large in implication. Defense customers don't experiment casually. They validate, test, and stress technology before committing even modest funds. That kind of validation doesn't just generate revenue, opens doors. It creates procurement pathways and reputational weight that commercial customers pay attention to. And this is where timing starts to matter. As of early January 2026, the stock has been trading roughly in the low to mid $6 range after a sharp spike late last year. That volatility reflects a market still trying to decide whether this is a story or a business. Short-term price movement is noise. What matters is whether execution over the next few months confirms that the transition from niche supplier to specialized AI systems provider is real. There are two near-term moments the market is watching closely. The first is management's scheduled appearance at the 28th Annual Needham Growth Conference in mid-January. That's not just another investor event. It's where serious institutional listeners expect specifics, customer engagement, deployment timelines, and concrete milestones. Vague language won't work in that room. Clear answers could reset expectations. The second is earnings. GSI typically reports later in the month, and Q3 fiscal 2026 results are expected toward the end of January. Investors will be looking past raw revenue and straight into the details: gross margin trajectory, system revenue mix, and commentary around demand visibility. Guidance clarity here matters more than headline numbers. Now, let's be grounded about risk, because this is where credibility is either earned or lost. Execution risk is real. Designing, validating, and delivering specialized AI hardware is capital-intensive and unforgiving. Missed milestones can stall momentum quickly. Customer concentration is another factor. With a small revenue base, delays from even one or two customers can distort quarterly results. There's also competitive risk. Larger semiconductor companies could decide that these niches are worth pursuing, and when they do, pricing pressure follows. Cash runway matters as well, especially with the next chapter already outlined. GSI has been open about its next-generation chip, internally known as Plato. Plato is positioned as a bridge from today's niche deployments toward broader edge AI and commercial applications. That transition is where upside lives, but it's also where costs rise. Tapeouts, validation, and ecosystem support aren't cheap. How management balances investment with dilution risk will be closely watched. Quick context on price before going further. These levels reflect where the stock was trading at the time this script was recorded. Prices move quickly, So always check real-time data before making any decisions. If you value calm, research-driven breakdowns like this, focused on real signals instead of hype, consider subscribing. It helps us keep bringing you overlooked U.S. stock opportunities with real-world relevance. From a monitoring perspective, there are 4 indicators that matter most over the next 3 to 12 months. First, revenue mix. Are system-level products becoming a larger percentage of sales? Second, customer diversification. Are new commercial and government customers being added, or does revenue remain concentrated? Third, product milestones. Are Gemini deployments expanding, and is Plato progressing on schedule? Fourth, financial discipline. Does the company maintain enough flexibility to fund growth without forcing aggressive dilution? Best-case outcomes here don't require domination of the AI hardware market. They require consistency. A handful of repeat customers, modest margin expansion, and clear roadmap execution could justify a very different valuation framework than the one the market has historically applied. In that scenario, re-rating happens quietly, quarter by quarter. The middle case is more restrained. GSI remains a specialized player. Growth is incremental. The stock trades in wide ranges, responding sharply to news but ultimately moving sideways as the market waits for proof of scalability. That outcome is common for companies navigating the jump from technology validation to commercial traction. The downside case is equally important to acknowledge. Delays, cost overruns, or a breakdown in demand could force difficult financing decisions. In microcaps, those moments tend to be swift and unforgiving. That's why position sizing and patience matter more here than conviction alone. So this isn't about predicting a breakout. It's about tracking a transition. GSI is no longer just a memory company, but it's not yet a proven AI systems business either. It's in between, and that's where both opportunity and risk live. Final price disclosure: these comments reflect the stock's trading range at the time of recording. Always verify current pricing and disclosures before acting. If you're watching this name, watch the signals, not the noise. Execution, margins, customers, and cash discipline will tell the story long before headlines do.